HP stock, ticker symbol HPQ. There are a lot of people talking about HPQ being a great value investing for the coming years. But aside from a value point of investing, from a dividend point of investing, it looks also very interesting. 3.2% dividend yield and payout ratio only at 21%. On top of that, they bought back a lot of shares in the past years. So is HPQ a stock to buy right now? In this video I'm going to show real quickly what HP does, a view at the historical returns, the fundamental analysis, the dividends, the major competitor, and in the last part I'm giving you my price target to see if they are a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does HP do? HP Incorporated is a leading provider of computers, printers and printer supplies. The company's main segments are personal systems and printing. Its personal systems segment contains notebooks, desktops and workstations. Its printing segments contain supplies, consumer hardware and commercial hardware. In 2015, Hewlett-Packard or HP was separated into HP Incorporated and HP Enterprises. When we check the latest quarterly results, we see that there are 6 key segments for the revenue breakdown. Notebook is by far the biggest segment with 47% share. Printing supplies is the second largest segment with 90% and desktop represents 17%. All these 6 segments together can be divided into 2 main segments: printing and personal systems. Their printing segment represents 55% of the total operating profit and has a profit margin of 19.3%, while the personal systems represents 45% of the operating profit and has a 6.9% profit margin, which is significantly lower. It's really nice that the printing department is their big money maker, but keep in mind that the printing industry isn't growing as fast as we see in this graph. It's expected that it will grow at 1% annually, so there's not a lot of growth. But maybe the 3D printing segment will prove me wrong in the future. When we check the revenue breakdown by region, we see that Americas represents 41% of the total revenue, and that EMEA represents 37% of the revenue, and APG represents 22%. In the US, there's not a lot of growth going on, only 1% year over year. While in EMEA there's 4 to 7% growth year over year, and in APG there's 9 to 10% growth year over year. When we focus on the main segments again, we see that personal systems containing notebooks, desktops and workstations is up 9% year over year. And especially the desktops are doing real good, being up 28% year over year, while notebooks are down 23% year over year in units. The printing segment is down 7% year over year, and this is also because there's not much growth in the printing business, as I discussed before. It's divided into supplies, commercial and consumer. Total hardware units are down 23%. And now that we know more about HP, it's time to check the historical stock price to see what happened there. I decided to include the S&P 500 as a benchmark and Dell, a major competitor of HPQ. On the 5-year chart we see that HPQ is up 95% including dividends, while the S&P 500 is up 68%. Dell is up the most with 101%. So both stocks easily beat the S&P 500 on the 5-year chart. On the 1-year chart it gets very interesting. HPQ is up 12% while the S&P 500 is down 12%. And Dell is also down 9%, so HPQ did a great job here. And then we have the 6-month chart where HPQ is down almost 18% and the S&P 500 is also down 18%. And Dell is down 29%. On the 1-month chart we see that HPQ is down 8%. The S&P 500 is up 1.5% and Dell is down almost 10%. So a lot of different things happened with these companies in the past years. Let's find out if HPQ stock is a buy by checking the fundamentals of this company. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to receive similar analysis to this one every week. And also don't forget to like this video. Let's continue by diving into the fundamentals. HPQ is a 33 billion market cap company with a 12 trailing month revenue of 64 billion. In this graph we see that the revenue over the past decade. Please keep in mind that the company did a split in 2015. So that's why you see a big decline in revenue there. From 2015 to 2022, the revenue went up quite nice and steady. So that's the part I'm focusing on, and that looks really good to me. The net income is at 6.5 billion, which gives us a profit margin of 10%, which is significantly higher than the 5-year average of 7.1%. So this looks very good. PE ratio is at only 5, which is insane low. And although it's not a bad thing, I would prefer a company with a PE ratio of 10 or higher. So it does worry me a little bit. Do investors think HPQ isn't worth the investment? Let's continue by analyzing the other parts of this stock to see why PE ratio might be this low. Return on assets is at 11.7%, which is above my 10% minimum. Return on equity doesn't look good at a minus 200%. Return on invested capital is at 77%, which is insane high, and also above the 5-year average, so this number really comforts me a lot. They do know how to invest their money, so this looks really good to me. Next up is the balance sheet and free cash flow statement. Total cash is at 4.48 billion. Operating cash flow is at 6.1 billion and leverage free cash flow is at 2.7 billion. You want them to be able to pay off a big chunk of the total debt. I prefer companies that are capable of paying down at least 50% of their total debt. HPQ is almost capable of paying down 50% of their total debt with the total cash. So I would prefer a little bit more healthier ratio here, but since it's not far away, I don't think this is a big problem or anything. So it's very important that the free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, do acquisitions, pay dividends, research and development. In this graph we see that since 2015, after the split up in the company, free cash flow is growing, but it's not always consistent. And it's the same story before splitting up the company. So keep an eye on this number, even while it's growing. You want to have a consistent growth pattern here. Especially since HPQ does pay a decent dividend, but also because they are buying back a lot of shares. And this is where they create a lot of value to the investor. In the past decade they bought back a lot of shares, especially after the lockdown period. In the past 5 years they bought back 36% of the shares outstanding, and this is insane. I think I've never seen a share buyback this high. By buying back a third of the company, your share increased by 50% in terms of ownership. This also makes it very easy to increase the dividends since less dividends are paid. And since we're talking about dividends anyway, HPQ pays a 3.2% dividend yield with an annual payout of $1 each share, or 25 cents each quarter. Payout ratio sits at only 21%, which is really low for a dividend yield this high. This also means that 80% of the free cash flow can be invested in other parts of the business, such as share buybacks or paying off debt. The 5-year growth rate is at 12.5%, which is pretty decent. They grew the dividends for 12 years in a row. So from a dividend perspective, this looks really good to me. Next up are the fundamentals of HPQ compared to Dell, a big competitor of HPQ. We see that both companies have a similar market cap, but Dell has 133,000 employees, while HPQ only has 51,000 employees. Both companies are trading at a very low PE ratio, so that's quite interesting. Dell has the highest revenue growth year over year and also the highest revenue 3 and 5-year compound annual growth rate, so Dell is definitely the winner here. HPQ does have a significantly higher net income margin, and return on equity and return on total capital is also way higher at HPQ. So in this part, HPQ is the winner. Dell has a lot of debt compared to the free cash flow, so to me HPQ is again the winner in this part. The last thing that I want to check are the dividends. HPQ has a higher dividend yield and also a higher dividend growth rate. They grew the dividends for 12 years in a row, and compared to Dell, they are definitely the winner in this part. Last part of this video is about the 3 price targets that I created for HPQ. I'm using the Everything Money software, which is one of the best tools out there, so please check them out, they are really great. I have a low, mid and high assumption based on revenue growth, profit margin, free cash flow margin, PE ratio, price to free cash flow and my desired annual return. Right now HPQ stock is at $31 a share. Based on my assumptions, HPQ has a low price target of $15 to $35, which is quite a big range. A mid price target of $37 to $50, also quite a big range, and a high price target of $69 a share. Personally, I think the mid price target is the most realistic one here, since it will grow at a slow and steady pace. But the share buybacks will add a lot of value, of course. Based on my mid-price target, HPQ is a buy at current prices. My final conclusion is that I think HPQ is a very interesting stock at current prices. They bought back a lot of shares, pay a pretty decent dividend yield, and are still growing. Not in double digits, of course, but they are growing quite slow and steady, which is not a bad thing necessarily. For now, I will add HPQ to my buy list and I will open a position very soon, since I think it's a great stock to own from a value point of investing, but also from a dividend point of investing. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.